morning, everyone. So you've been in business with some fellow shareholders for a while now, and one of you wants out, one of you wants to buy the other one out, whatever the case may be. There are 1,000 different ways of getting that done. I want to talk about two easier options that you have, and one is to buy their shares at a fair market value. So essentially what that requires is for you getting a business valuation done, and those can be done by a certified business valuator, which can be pretty expensive, but depending on your company, well worth it to make sure everybody's getting a fair deal. We don't do that. We sub that out to another accountant, but or you can figure out the value on your own. As long as you are third-party people, there's no problem with that. Okay. The other way that you can get shareholders out of a corporation is by redeeming their shares. So essentially, the corporation then buys the shares from the shareholder. Now, this is nice when the corporation has a bunch of money in the bank and able to afford to pay for that, and the purchasing or the benefiting shareholder does not have the cash to buy it and does not want to pay personal tax on that. When that occurs, there is a deemed dividend. So as long as the money that was earned is safe income, it'll be a deemed dividend, okay? There are some special rules when it comes to capital gains. I won't get into that because it gets pretty technical, but two options. One, redeem the shares, corporation pays the shareholder out. Those shares get sucked back into the corporation, thus leaving the other shareholder or shareholders with more ownership. Or two, shareholder just straight out buys the other shareholders' shares. Now, there's advantages to that way too. So the advantage to that is that the seller can then, if you qualify for the capital gains exemption, you can claim those and pay zero federal tax, assuming alternative minimum tax is not an issue. Tax is very, very low. And there might be some negotiation between those two things. If one third party wants another third party to redeem the shares instead of the capital gains exemption, then there might be a change in price slightly. Completely up to you. Make sure you have the right people on your side doing that work for you. Make sure you are employing accountants and lawyers. Okay, it's very important. Even I employ a lawyer when stuff like that happens. Take care of yourself. Take care of your family. Take care of your friends, and be well.
Hey, thanks for watching. If you enjoyed this video, consider subscribing to our YouTube channel. You can also follow us on Facebook, Twitter, Instagram, and TikTok, all of which are linked in the description below. We're more than just an accounting firm. We do business consulting and media creation for our small businesses. Consider checking us out. It would really mean a lot. Hope to see you soon.